everyone, for tuning in. So, I went to drop my daughter off up at Yukon today, upstate Connecticut. It's kind of pretty nice up there. It's actually beautiful. I might end up moving up there one day. But anyway, so we got all this news going on. All right, first of all, let me put my bitch in, okay, about the longshoremen. Okay, these guys make over $100,000 a year for like pushing a box around. They want an 80% increase in 5 years. They were countered with 50% and they turned it down. I guess I'm upset because I am in the wrong line of work. I mean, I should have become a longshoreman. It's like, hey, it's easy work. You make six figures. And did you know this, that the spokesman of the longshoreman, working man my ass, excuse me, but the spokesman gets paid $900,000 a year. He drives a Bentley. I mean, I'm not holding it against him. He's got the last laugh. I wish I made $900,000 a year and had a Bentley. Actually, I would never buy a Bentley because my daughter would probably just crash it, just like she crashed her Cadillac and her Mercedes. But that's a different conversation for a different time. But anyway, we also got all this stuff going on over there in Iran, and I mean, sorry, in Israel. Now, other than thinking like, gee, I should have been the spokesman of the Longshoremen's Union, so I can make $900,000 a year and drive a Bentley, I would be thinking, man, I would not want to be the head of the Iranian military services or whatever they call them, who is in charge of launching missiles, because it seems like all the missiles they shoot gets shot down. So I don't know. But here is what I want to tell you. You know what? We got all this news going on. There's all this, like, I guess, for lack of a better term, noise around the markets. I just think this is a really good example to point out how important it is to know where these important price levels are. So, with all this noise and everything and so forth and so on, oil rally today. Where did oil find a top? Pretend you didn't listen to the news. And frankly, you probably shouldn't. Probably good for your mental health. I know it'd be good for mine. Where did oil find a top? Where did it run into resistance? The level that had been support before, the level that was resistance before. For some reason, this price level, we're going to call it, we're just going to call it 71.70. I mean, look, that's where we hit resistance. You don't need to be a chart guru to see that. So, this is why I tell people, like, forget the news, shut the news off, just watch the price levels. If I was on a desert island and I had no idea what the hell was going on in Israel or with the dock union or the longshoreman strike or whatever, I would have said, you know what? If we get to 71.70 or so, there's a good chance we're going to find resistance there. Why? Because it was a support level here, it was a resistance level. For whatever reason, this price level is important. So shut the friggin' news off. And one of you asked me last night or texted me, like, what really drives markets? Like, what makes markets move? And my experience, and I was in the institutional trading world for 20 years, is that 95% of what moves markets is like short-term technicals. In the institutional trading world, maybe it's different in the retail day trading world, but in the institutional trading world, people don't sit around and watch the news and say, oh, this just happened. Oh, missiles just fell on, Israel. I'm going to start buying oil or I'm going to sell oil. The vast majority of investment strategies are well thought out ahead of time. So, there's really not going to be that big of an impact from what the current news stories are. I think that the media just needs to find a reason or attach some kind of a reason to whatever move there is, because they can't just sit there and be like, I don't know. I don't know. Now, if you were to ask me, like, why did we find resistance at the level we did today? I'm not going to say, like, I don't know. I'm going to be like, well, because this level was support and then it became resistance. For whatever reason, the powers that be that trade oil got really busy around this price level. So there's a lot of what we would call vested interest or interest at these levels. So that's why. All right. I mean, I know the media wants to put a lot of, whatever on it. It's like, oh, all right, today oil was up 1.4% because of this, blah, 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 blah. Well, guess what? Back here, oil was up 3.4%. Actually, maybe I have that wrong. Okay, up 3.6% today. Oh, war in Israel, war in Israel, war in Israel, Iran, 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 Iran. All right, well, what about this day? Oil was up 3.8%. What happened back here? Was there any fundamental news going on back here? No. It's just a rally. One of the main reasons why we get resistance is because we have remorseful buyers who are losing money trying to sell on the way back up because they want to get out of break even. So when you get a fast move down and you spend some time trading and you get back into those price levels going back the other way, you tend to get a fast move up because you just don't have this large group of remorseful buyers who are trying to sell to get out on the way back up. So again, forget the news. If you want to be a successful trader, do not listen to the news. If you want to be a successful trader, learn how to let the market tell you what to do. I know it's a hard thing to do, but most things that are worth doing are not easy, right? All right, so here's the S&P. This is what we've been talking about. We've been talking about how like most sectors have been weak. The only thing that's really been propping up the market has been consumer discretionary, and the only thing that's really been propping up consumer discretionary is Tesla. So, without even knowing, because I just got home after a 3-hour drive, I'm going to bring up Tesla, and I will bet you that it's down. And if it's not, give me your address. I'll send you $10. All right, let's see here, Tesla. Yep, see? So here we go. What happened? Tesla got to a level that had been resistance. A lot of times when we get to resistance levels, we get a sell-off because resistance is a large group of sellers. And sometimes when the price gets to resistance, some of the sellers start to worry that they're going to get undercut. They start to think, oh, gee, someone's going to be willing to sell at a lower price than me. That's who the buyers are going to go to. So I'm going to reduce the price I'm willing to sell at. It becomes a snowball effect. So let me just give you a little bit more insight here. Man, I've been watching some Sylvester Stallone movies. They're amazing. I mean, I love Sylvester Stallone. It's like the dude was in like 3 movies that were great, 3 that were okay, and like 98 that sucked. All right, so anyway, so here's the sectors that make up the S&P 500. Tech has been weak, financials have been weak, health has been weak, community services has been weak. The only thing that has been holding up the market is consumer discretionary. We're going to look at that ETF, consumer discretionary. All right. I mean, this is how real traders think. This is what goes on in the institutional trading world. Take it or leave it. If you want me to give you your, trade of the day or whatever, this site is not for you. If you want to learn how to really trade and how to make your style developed around your personality, well, you've come to the right place. So here's consumer discretionary. Now let's do a little bit more of a deep dive. These are the sectors that make up the S&P. We can also look within the sectors at the stocks that make up the sectors. If we look at the consumer discretionary sector, we can see that it's dominated by 2 stocks. Amazon is 22%, Tesla is 15%. So let's go take a little bit of a walk back here. Tech sector. Wow, actually the action here is really weak. Once again, we get to resistance, we sell off. Financial sector. And we're just looking at the ETFs going sideways. Healthcare sector. Sideways. Consumer discretionary sector. All right, this is the sector that's been propping up the market. And it's dominated by 2 stocks, and now they are each going down. So, I mean, there really is what I want to tell you. It's like, forget the news. I mean, just listen to the market. Let the market tell you what to do. The best traders have like a reactionary attitude. They don't come in every day thinking, oh, gee, this is in the news and now I'm going to do this. The best traders come in and they're like, all right, let me see what the hell's going on. Oh, weakness here. The one thing that's been strong is now weak. That means there's a good chance the market's going down. So I'm going to get on the short side of it. So that's pretty much it. So anyway, make sure you check in. We could talk about different ways to. Oh, actually, you know what? One thing I want to talk about tomorrow is let's look for some trades in the energy sector. The energy, believe it or not, is a very small part of the market. It's only about 3 or 4% of the S&P 500. But that means that it can go in the opposite direction of the market. So we want to find the oil and gas exploration ETF. If if oil starts to really take off, and I think it's going to, there's definitely going to be some trades here. So here's XOP, right? This is not a sector, this is an industry. So we can look at, just like we look in the sector, right? The S&P is made up of sectors. The sectors are made up of industries. So we can look at the industry ETF and see what stocks are in it. We're just going to go over here to holdings. I'm just looking at SSGA, State Street Global Advisors. So here we have a bunch of them. It's not dominated like the energy sector is dominated by Chevron and Exxon. But wow, look at this. CNX Resources is all of a sudden the biggest stock. Wow, that's pretty amazing. All right, so let's just take a look at CNX Resources. Oh man, see, I was never good at spelling. As a matter of fact, I remember when my mother, when I was probably like fifth or sixth grade, my mother had a meeting with my teacher. Oh, look at this. See? I mean, look at that. I mean, this thing is overbought. Looking for some trading ideas. I'd probably be thinking about this on the short side. Let's see what Chesapeake. See, that's CHK. Eh, this doesn't look as stretched out to me. The idea is to let the market tell you what to do. If you're looking for short-term trading ideas, analysts are wrong. I'm wrong. You're wrong. This person's wrong. That guru is wrong. The market is never wrong. If you let the market tell you what to do, you will have a much greater chance of being successful. So anyway, my gist of it is market going down, energy going up. Check back in tomorrow, and yeah, we'll see you then. There's going to be some really good opportunities to make money in this market over the next couple of days or weeks or so. Sometimes you got to stay on the sidelines. Sometimes you got to be active. These next week or two or a couple of days is time to be active and involved. I will see you then, everybody.